Greetings everyone, Joseph James here from theschooloftrade.com in this fifth and final video of this 5-part video series of trade management. Now of course, before we talk about the fifth and final video here, let's recap where we left off so far. In the first 4 videos, we covered a lot of great ground here when it comes to our trade management strategies. The first video covered the 3 phases of the move. We talked about the noise, the follow-through, and the exhaustion, right? We have to know what the moves look like in order for us to better understand how to structure our trade management. Well, of course, the second video then talked about once we know what the moves look like, now let's look at the emotional response behind your trading. More targets, fewer stops, long-term profits, right? We talked about how our emotions and how those emotions interact with our trading. Well, we want to make sure that how we manage our trades accompanies the actual emotional response. So once we know the response, we can then, of course, further structure our trade management style. Now, based upon the emotional response and knowing the actual 3 phases of the move, our third video talked about the basic fundamentals of the trade management method that we use in the live trade room. Quick targets, eliminating risk, position to capitalize on the bigger moves of the day. And then last week's video, we talked about the 2 different approaches, right? Once we execute our trades, we can then, of course, choose between mechanical or discretionary trade management styles. And then now, the 5th and final video of this 5-video series, we'll talk about the different traders having different trade management needs. Every single trader will have different goals, different objectives, different personalities, different risk tolerances, and of course that means we've got to take a customized approach to you as a trader. Are you a scalper, an intraday trader, or a position or a swing trader? Well, a scalper, of course, taking lots of trades in and out of the market dozens and dozens of times every day, or an intraday trader, which is kind of more known as a day trader, somebody who chooses to, of course, execute trades that will then be closed before the end of the day, right? It's a day trader. We're not going to hold things overnight. Your position or your swing trader, where you'll take a position on Monday and potentially hold that through Tuesday, Wednesday, Thursday as a position trader. As a swing trader, you may take a trade on August 1st and hold that trade all the way through November 31st. So of course, depending on what type of trader you want to be, we have a solution for you. Fastest time frames for scalpers, 1-minute charts, 4-range charts, 89-tick charts. If you're an intraday trader, we use medium time frames for you guys, 3-minute charts, 8-range charts, 144-tick charts. Or maybe you're a position trader or a swing trader, where of course we're looking now for a very slower time frame. Could be an 8-minute chart, a 13-range chart, 344 tick. You could also slow it way down. You could also make it a 13-minute, a 21-range, 577 tick chart. Once we identify what type of trader you are, whether it be a scalper, intraday, or position swing trader, if you're a scalper, you could use a fast time frame. You're going to want to have pretty tight stops, pretty tight targets, and because you're going to see lots of trades and lots of patterns every day. So you don't need to have too much risk. But at the same time, as a scalper, we're not going for those big, huge, $1,000 trades here. So we have tight targets as well. Now, when it comes to an intraday basis, right, which is pretty much described as a day trader, well, you're going to, of course, slow it down just a little bit, have a little bit wider stops, right? So medium-sized stops. You're going to see a moderate number of trades and still lots of patterns. As a position or a swing trader, we, of course, have very wide stops, wide targets. You'll see a lot fewer patterns because you're looking at a slower time frame, which means you'll take fewer trades. However, though, of course, as a swing trader or position trader, those patterns you see will be more powerful because they're happening on a much slower time frame. Let's take a look at the different management styles with the exact stops and targets and kind of give you guys an example of how, whether or not you want to be a scalper, an intraday trader, or a swing trader, we can pretty much customize and fit this to your exact needs. Now, these, of course, are universal patterns, so this will work across any market I choose. The important thing here is understanding what your stops and your targets are going to look like. And then, of course, remember, each individual trader will zoom in and really kind of focus on what the specifics should be for each trader, but this is going to give you kind of just a general idea of what they look like. As a scalper, very fast time frames. We've already talked about tight stops, tight targets. So, for example, a 6-tick stop and targets at 4 and 8. As an intraday trader or a day trader, right, flattening before the end of the day, we can, of course, widen things out a little bit. An 8-tick stop, 6-tick target, and a 10-tick target. And then, of course, we'll widen them all the way out for a position trader or a swing trader. Again, this could really get wide if you wanted to. Okay, you could easily be using a 1-week chart if you want to as a swing trader. But your average swing trader or position trader will be using a 13-tick stop, 8-tick target, and 13-tick. All right, so 8 and 13 for your first 2 targets. Okay, so what are some things we're looking to ask ourselves, right? How do we identify which one of these categories we fall into? Are we looking for more trades each day, right? Do you find yourself looking for more action every day? If so, you want to be a scalper. Maybe you're seeing that this is happening way too fast. You want to slow things down. You can take fewer trades a day. You can, of course, slow down the price action by looking at a position or a swing trader setup. So no matter what your direction, you want to speed it up, be more aggressive, that's fine. You can be a scalper, and we can help you, of course, customize that plan of attack for a scalper. You want to slow things down, see fewer patterns every day, really be able to focus on only the very best patterns? Well, of course, slow things down to an intraday or a position or a swing trader system. It doesn't matter whether or not you want more trades, fewer trades, faster price action, or slower price action. These are universal price patterns that, of course, make this possible for any market and any trader, whether or not you're a scalper, a day trader, or a position or a swing trader. Now, of course, we also have to remember, guys, just because we now know what type of trader you are, whether you're tight stops or wide stops, and of course, kind of how we play into looking for faster or slower price action, we also want to remember that there are different account sizes. Now, we can't talk about trade management unless we also talk about account management. I can't tell you guys how many times I personally have made mistakes in previous times in my career where I wasn't paying attention, I was either trying to grow my account too fast, or I was being pretty much stagnant with it and being too conservative. So it's important we remember you can be way too conservative and you can also be way too aggressive. So we have to kind of find the happy medium somewhere in between. Now, each person will be different, guys. And again, I'm gonna kind of lump these into some main categories here. 1 contract, 2 contracts, and then 3 or more contracts. Now, of course, when you're talking about 20 contracts or more, that puts us into kind of a liquidity issue. So as an advanced member, we'll talk about trading large sizes. But for the most of you guys, you'll be looking at 1 to 10 contracts. So if you're 1 contract trader, we have a 1-to-1 risk-reward ratio. Now, risk-reward ratio is very important for your long-term success. If we're risking, say, 10 ticks to only make 5 ticks, that's a 2-to-1 risk-reward ratio, which means I will have to have twice as many winners than I do losers to make a profit. So risk-reward ratio is a very vital piece of the pie here. We never want to risk too much compared to how much we have for a reward. Now, no matter what size your account, any trader can make consistent income as long as they're managing their account correctly. In fact, we can have a 51% winning ratio, and as long as we're managing our trades correctly with that 1-to-1 or better risk-reward ratio, we're going to be just fine. So for a 1 contract trader, or while you're getting started with 1 contract, a 1-to-1 ratio. For 2 contracts, 1.25 to 1, and for 3 or more contracts, right, 3, 4, 5, 6, all the way up to about 19, 20 contracts, you'll be having a 1.5 to 1 ratio, which means, of course, we're going to risk, right, 1.5 times what we were trying to see as a reward, which of course means that anything above a 75% winning ratio means we will make money every single day in the long run. So again, guys, we've got to really look at the risk-reward ratio, keep it as low as possible, never want to risk too much, and of course, guys, everybody has different account sizes, so we have to, of course, when we talk about trade management, we also want to talk about the different account sizes or how to, of course, manage different accounts. So let's recap. One size does not fit all for our trades. We all know that, right? So, of course, our trade management styles will be custom tailored to fit different types of traders, different types of accounts, and different types of personalities. Now, of course, we have scalpers, intraday traders, and position traders, right? Depending on which type of trader you are, we will, of course, discuss or customize that trade management style, wide targets or tight targets. If you have different sized accounts, whether it be 1 contract, 2 contracts, 3 or more contracts, we'll look at, of course, managing your trade account along with each trade according to the size of your trade account. And then don't forget, guys, we also have different personalities as well. Aggressive traders versus conservative traders, right? Knowing how to grow your account takes patience and discipline. And of course, we always start with 1 contract and keep that risk-reward ratio intact. So no matter what your personality, whether you're aggressive or conservative, no matter what your size account, and no matter what type of trader you think you are or what trader you might become in the future, we have a customized trading plan, guys, that will allow you to manage your trades, manage your account with the highest efficiency and, of course, with most long-term success. Now, here's what's coming up next. This is our final video of this series. This is video 5 of this 5-part series. Keep an eye out for the next video series coming out next week here at the School of Trade. And don't forget, guys, we'll see you guys tomorrow morning in our live trade room. Opens up at 7:45 a.m. Eastern Time. My name is Joseph James. Hope the video helps. Hope you guys learned about trade management, and we'll see you guys back in our room tomorrow morning, 7:45 a.m. Don't miss a tick. Bye-bye for now.